A lot of my viewers are renters, and I'm not sure if you're going to agree with this one over here, but this was the headlines for today. Apartment rents drop further with vacancies at record highs. So how can this help homeowners, home buyers? We're going to break that down today because my name is Dan Frio, folks. My goal is to come in each day to explain to you guys what the heck's going on with those and the whys behind it. So we got some good news on the inflation front that I don't think a lot of people paid attention to, nor did the markets. So let's get over to the news of what I'm picking out for today that's going to give us some direction on maybe solidifying what the Federal Reserve is going to do because of inflation. What am I talking about? Well, right through here. Inflation, the AKA apartment rents, are dropping. They're basically flat as a pancake, and they're down over 5% over the last few years. Well, I don't know if you know this, but the rent equivalent housing costs make up 40% of the inflation numbers. So if you have the numbers that, well, the Federal Reserve is using a number about 7% on this. So if you have an inflation numbers on housing, you're using a model at 7%, but it's actually zero. Well, what's that going to do to the inflation numbers? Well, I think that's going to be a surprise to the markets here coming soon. So that's, I think, going to be some good information for the markets coming down the pike. But you're here for rates. So what's going to happen with rates tomorrow, next week, and if you're looking to buy maybe in 2026? Let's take a dive because I think today's news is going to help give us the direction on further rate cuts. So right through here, the first thing I want you guys to understand are where are rates today? So it depends on which website you go to. So if you go to Mortgage News Daily, that's what we use a lot of times, you're going to get a specific rate. And then if you go to Freddie Mac, you'll get another rate. Maybe you'll even go to Yahoo Finance and say, okay, who's the best mortgage lender for first-time homebuyers? So you click it, you scroll down, and who is it? Well, we got Tomo Mortgage, First Fidelity, Optimum First Mortgage, Mutual of Omaha, AIM Mortgage, Best Home for First-Time Home Buyers. Yeah, that's me. Rocket Mortgage, Bank of America, Penny. Wonder if you could do all this with one application, one credit pull. Well, if you're a homeowner right now, I got a tool for you right through here. It's called the RateWatch 2.0 tool. So, folks, my name is Dan Frio. I'm actually a federally licensed mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. We have a slogan here at the bank. It's one application, one credit pool. We're going to compare your loan with over 30 different lenders. How do we do that? Well, basically, we're set up with over 30 lenders to assure that you're getting some of the best rates and lowest fees in the market. So we created this tool over here for you guys over through there so you don't have to go through all this mayhem to try to figure out who's got the best rate because we can actually do that for you. I'll explain a little further at the end of this video. So this gets a little confusing. Let's get over to it. So the first thing we want to talk about today is really the realistic mortgage rates. But what are tied to mortgage rates? Where are they going to go from here? Well, this is what we want to look at. What the Federal Reserve is going to do at the next meeting, and I know we talk about this each day, but a lot of pieces of this puzzle change today. Okay, so let's get over to it. Here's what the Federal Reserve looks at, and we go through this each day. One big component might have just changed. Right through here. The PCE, what we're getting right now is we have inflation that's spiking up a little bit, but I think we're capped out, and I think we're on a trajectory down now. Yeah, I said down. So I'm going to give you some shocking information where I think the inflation numbers are going to go. One, oil prices are going to hit $55 a barrel and even might stick there and go a little bit lower. That's going to be tremendous for inflation. The next piece of the puzzle is what we just went over here. The apartment equivalent rents for a home. It's flatlined. The federal government has been using rates between 7 and even lower numbers, maybe 5%. If that number gets adjusted to zero, we have oil at under $60 a barrel, you're going to see inflation start to really drive down. So now the dilemma we have is where is tariffs going to play a role in this? And that's the wild card. So what do you do if you're trying to project out, what I'm going to do next week, next month, 3 months, or 6 months down the road? Well, let's get to some of the data that we're going to want to look at to take a kind of a deeper dive into that. So over the next 30 days, we would just want to focus in on the data that's coming out this week because the Federal Reserve is coming out next week and they're going to tell us what they're going to do. Most likely they're going to cut rates, and I'll get to that here in a second. But the numbers we got this week were this. Manufacturing numbers and things like that. Look at the numbers. They came in basically on point. We got 52, 52, 48, 48, 58, 58. Then we got some numbers right through here that's coming on Wednesday. Really no news today, but we have employment numbers coming from ADP. I don't think this is going to be a market mover either. But Thursday and Friday, They will be. We're going to get government numbers on initial jobless claims and continued claims. And we're also going to get the PCE, the number one inflation number that the Federal Reserve monitors. So that's what's right through here. So I'm not saying it's going to happen at this next reading, but over the next few readings, you're going to see this number on the inflation start to tick downwards, and you're going to have a lot of economists sitting there scratching their head. Folks, you're going to hear me say, I told you here first. So that's my projections and my forecast on inflation. Don't think anything's going to happen on the unemployment front. The economic news this week, we'll fill in that as it comes in Thursday and Friday. So let's get over to what the bond market's doing today. But first, the first thing I want to let you know is right through here. The new rent equivalent housing. What do the numbers truly look like? So to really give you the finite number on this, let's go over to CNBC. This is Diane Olick. She does a fantastic job. She's one of my next favorites next to Rick Santelli. Let's see what Diane Olick has to say about these numbers. And is it going to help or basically maybe hurt the housing market? A little bit surprising.
Some new weakness in the housing market that might be good news finally for renters. Of course, not so much for the rental stocks. Diana Olick is here with this week's property play. Hi, Diana.
Hey, Kelly. Yeah, we've got an exclusive early look read on November rent data out tomorrow. It's showing that continued new supply and weaker demand are pushing vacancies up and rents down. The national median rent for apartments fell 1% in November from October, according to Apartment List. It was the fourth consecutive monthly drop. Apartment rents are down 1.1% from November of last year.
Okay, I got to stop there. We're going to rewind it 1 second. Okay, so here's what I've been saying. And folks, please rewind. Look at some videos I did last year and the year before. Here's what I've been saying. I said the Federal Reserve's behind the ball on this piece of the equation. This is the inflation part of housing. Why it's so important? It's 40% of the inflation numbers. Okay, so we've been saying this number has been stagnant for at least 1 or 2 years. The Federal Reserve and the other economists are using a number between 5 and 7%. Okay, so here's where the true numbers are. If you go all the way over there at 2022, say, it was at a reading of 1.4. It's basically right there. It's been stagnant. Hasn't really moved over the last 2 to 3 years. So that's what we're going to see, that along with the oil prices. Those alone are going to bring down the inflation numbers. But let's go back over to Diane. Let's see what else she has to say about this. I'm going to scroll back 10 seconds so she can repeat this and kind of pick up where she left off. So Diane, take it back.
For apartments fell 1% in November from October, according to Apartment List. It was the fourth consecutive monthly drop. Apartment rents are down 1.1% from November of last year and about 5% from their 2022 peak. Now, vacancies hit a record high of 7.2% in October. It was unchanged in November, and it comes after a really historic surge in apartment construction brought on by big pandemic demand. Now, since it takes a while to build a large building, this supply is still on the high side, still coming through the pipeline, although it is expected to fall back next year.
We'll take it away from there. So do you get it? Do you get it? We've been talking about this for a long time. So again, hopefully you go back, look at a video I did 2 years ago on my forecast, my expectations and things, and you'll see that. So now let's get over to this, the bond market that you're here for right through here. So if you're new to my channel, we follow this right through here. This is the mortgage bond that trades on Wall Street. The yield on this thing, it makes up basically your mortgage rate. So here's how it works. Today, the price of a mortgage bond went up 10 ticks. All you need to know is if the price of a bond goes up, rates or yields come down. This is a mortgage bond. Well, that means mortgage rates are going to come down. But here's what happened yesterday. So that's why we're basically back to net neutral of where we started the week. Here's where we started yesterday morning. Then we had that Japanese scare, and then it went all the way down through here, and then it basically fizzled out. And then today, there's really not any more news. Chairman Powell's supposed to speak later today, and then the markets are rallying just a little bit. I don't think there's really any bad news, but there's really no good news. So the markets are just stabilizing right here. So I'm basically expecting that to just calm the markets at this point. So let's get over to this piece of the puzzle that I want to talk rate lock or should I float? So I'm still on the tune of closing within 30 days. Just lock in. Don't really price compare unless you really want to check out to see how we can compare things, because we do have a slogan. It's one application, one credit pool. We're going to compare your loan with over 33 lenders. How do we do that? Well, let's finish this first in a second. If you're closing 30 days or later, just float. subscribe down over there, watch my channel, so every day I can explain to you, should you lock or float. So if you're a home buyer, you're a homeowner, what should you do during these times? Well, check out our basically webpage. Here's what we do for you, folks. If you're in the market for a refinance, just fill out our RateWatch 2.0 tool and just put in the rate that you want to be notified when rates drop. If you're looking to purchase, maybe you're looking to build, schedule an appointment with us. Put in your application, call us, email us. Make sure you're getting qualified with the right programs. Make sure you're working on the credit score that you think you have. And we have tools down below to really check your true credit scores. And you might be surprised sometimes what income the banks use to qualify your loan might surprise you a little bit. So make sure you get all your ducks in a row before you go out there and buy or build. So reach out to us, schedule an appointment so we can go through a consultation with you to do a customized mortgage analysis for you and you only. So my expectations are today, with this great news on the apartment rents, is inflation is going to continue to come down. The employment numbers are going to stay stagnant. The markets are just going to sit there and scratch their heads as the markets just stay steady. And I'm really not thinking of any interruptions between now and over the next 30 days. So that's it for today, folks. Hopefully now you understand a little bit more, at least on my thoughts on what the heck's going on with these and the whys behind it. So thanks for watching, folks. If you haven't subscribed yet, please do so over there. If you're looking to buy or sell or refinance, reach out to us. We'd love to help. Thanks for watching. Have a great night. I'll see you back here tomorrow morning. Take care. Bye-bye.